We'll start with an epic fall for Apple. The stock shedding more than $85 billion in market cap after a judge ruled against the company in its battle royale versus the maker of Fortnite. Let's get to Josh Lipton for all the details that came down this afternoon. Hi, Josh.
So, Courtney, a historic high-profile antitrust fight between Apple and Epic, and now we do have that decision. Apple winning on 9 of 10 counts. The judge saying Apple is not a monopolist. The court cannot ultimately conclude, the judge saying, that Apple is a monopolist under either federal or state antitrust laws. Apple's Kate Adams saying, "We are very pleased with the court's ruling, and we consider this a huge win for Apple." Epic's Tim Sweeney, on the other hand, not sounding as happy, tweeting, "Today's ruling isn't a win for developers or for consumers." But it was not a total victory for Apple either. The judge also saying that Apple must give developers the option to steer users to outside payment systems. Now, that could impact Apple's App Store sales, which grossed an estimated $64 billion in 2020. But lots of remaining questions here for investors. Will Apple appeal this decision? And even if this rule is implemented, how would consumers respond? Gene Munster of Loop Ventures bets most consumers, even if given alternatives, would actually stick with Apple's payment system because it's simpler, easier, and more convenient. Munster estimates the financial impact if this injunction were enforced. Worst case, a 4% hit to annual earnings for the first year. More likely, he says, a 1% hit. However, this does not end challenges for the App Store. It has been under increasing scrutiny, with regulators and lawmakers taking, we know, a much harder look at this business. Courtney, back to you.
Yeah, well, very interesting day, and I'm not sure that everyone agrees that it was a win for Apple, especially if you look at the share reaction. Josh, thank you. Let's trade this and get the opinions of our traders here tonight. I'm going to start with you, Karen. I mean, what do you make of this ruling? We saw Apple shares fall, but Josh says Apple says they're happy with it. Okay, Apple's not a monopoly, but they have to allow other options for these in-app purchases. Are we going to gain back some of what we lost today for Apple once this has been digested? Or is this really going to hurt Apple in the long run, maybe 4% or more, as Gene Munster calculates?
Well, we don't know exactly, right? Gene brought up the point. We'll see how users actually end up purchasing, right? Do they go outside of the Apple for that, or what's the mechanism to be able to do that? But what's interesting to me is, okay, anytime you have a lawsuit, there's uncertainty. So what was the market expecting? Were they expecting just an absolute, complete Apple victory? I didn't think so. So this pullback of 3% on a day when the market was down 250, so wherever it closed, isn't so gigantic, particularly given the run that Apple's had. So, I mean, part of me saying the market is just kind of going to shrug it off. We'll see. Does Apple appeal this? Probably. Does Epic appeal the parts that they lost? I don't know. I assume so, but I'm not really sure. I do think, though, that the judge's words about it not being a monopoly are important, and that is a win. That threat has sort of been hanging over Apple. So I think ultimately it's not going to be that big of a deal. We'll see once it's implemented. Sort of reminds me a little bit of GDPR in Europe, and what was that going to do to Google and Facebook? And ultimately it didn't end up doing very much at all. So we'll see. But as an Apple shareholder, I'm staying long. This is not going to shake me out of the stock.
Okay. Bonawyn, what do you make of this? Is this an opportunity to jump in and take some profits, or do you agree with Karen and think that if you have Apple in your portfolio, you hold with it right here?
Short answer is yes. If it's in your portfolio, I definitely don't think you're getting out of the name. But if we take a step back and we think about like the Apple story, a big reason behind why it should get the multiple expansion that it's gotten is that it should be valued at least partially as a service company. Right, so I do think there is some risk there. But now let's talk about like theoretically what may happen versus practically what is likely to happen. So theoretically, yes, there's these alternative methods of payment that may siphon off some profitability from this service behemoth. But practically speaking, I think whenever you're dealing with a consumer-facing type of business, you're definitely shedding some light into what consumer behavior is. And if we've seen anything from Apple, whether it's people kind of like re-engaging, buying new iPhones every time there's a new cycle, you've kind of seen that there is a bit of habitual nature to how people are going to interact. And so practically speaking, I think that the risk is likely to be much more muted than the worst case scenario that we're speaking of here. So I think if you've been looking for a pullback, I think this is an opportunity for you to maybe add slightly to your position. I always am against like backing up the truck and buying everything in one clip, but I don't think there's reason yet for you to completely puke your position, not at all.
Nadine, what do you make of this? I mean, Apple did have $64 billion in its App Store revenue in 2020. So maybe this does take a bite of it, but maybe not enough to be significant. Or maybe it is. What do you make?
I think that Bonawyn and Karen are right. And what you look at is what's the worst case scenario, and then you start cutting it down, right? Which is it's not really a rate of 30%, maybe a blended rate of 22, 23%. Okay, so the hit isn't that bad. And then I think what Bonawyn's getting at, it's about friction. So if it's a lot of friction for a customer to do something different, they might just not do it, not care. So if it's, call it 80 cents versus $1 for an in-game purchase, they might not change their behavior. So when you look at that, and obviously it had a run up, but today we're looking at it being oversold. So maybe our trading range is 147 to 158. That gives me 7.5 odds upside versus downside. And people are paying for protection. So we're saying they're paying a lot for protection. I've got more upside than downside. This probably isn't as bad as the headline. And I actually think it's a huge win for Apple. They're saying they're not a monopoly. So if I'm Apple, I don't think I would contest this. I'd say, all right, I lost on 1 out of 10. I'm going home pretty happy.
And Mr. Najarian, what do you make of that? I see you nodding along with what Nadine had to say there about the judge's comments in regards to the monopoly, or not.
Yeah, I totally agree with what Nadine was saying right there. As a matter of fact, when I talked to a couple of different people, Gene Munster being one of them, as we got all this news today, and he talked about it being noise, being very short term in terms of the impact he thinks. And to the point of all three, I think that there is a comfort level, and people will stay somewhere, even if it might not be at the right price. They might stay somewhere just from a comfort perspective, so the losses probably wouldn't be at that higher end. I think Gene was saying 1% to 4%. Well, I think he'd lean more towards the 1% because of in terms of the losses that they would have. But it's a really interesting day. There's no doubt about it. This is something, let's just go back to June, though. Stock was 123. Then it was 157 a couple of days ago. Here we are. We pulled all the way back to what, 148? So let's not get overboard. This is exactly where the stock was on the run-up on August 27th, 2 weeks ago today. So the pullback doesn't seem like a whole lot to it to me.
Fair enough. Karen, let me throw one out there and think about who could be a beneficiary of this ruling. Are there any names that might actually benefit from being able to take in some revenue from these in-app purchases that might have previously gone to Apple? Is there sort of an under-the-radar trade we could be thinking about here?
Well, it's not so under the radar, but I think for a name like Match, right, Barry Diller was quite vocal about how onerous the Apple charges are to be on the App Store, right? So to the extent that maybe there's a model for that rate being reduced, it's good for them. It's good. I mean, a number of ones who Spotify or Bumble, I think, names like that, maybe their margins will improve if they're not paying so much to Apple.
Okay, fair enough. Nadine, I want to give you the last chance to wrap this one up here. What else should we be thinking about as we watch this slide in Apple that it seems like most of the traders believe is a little bit overdone because the long-term damage to Apple may not be so bad after all?
I think you can, if you don't have a position, you can start to enter. If you have a position, you don't have to worry. I wouldn't go out buying protection right here. So I think you can just stay the course. We're going to learn a lot next week about fundamentally the strategy for some of their products and new product launches. So I just view this as we've had a bit of a weak market. Tech sold off. Tech overall is oversold. So just stay the course. And if you want to add because you don't have a full position, it's time to add.